Hello everyone and welcome to Spot On. My name is Rebecca Neal and with me today I have Scott Parker of Acadia. Scott, thank you so much for joining me.
Thanks for having me.
Yeah. So I'd like to give everyone a little background about what it is you do and why you founded Acadia.
Well, thanks for having me. Honored to be here. We're in the medical professional liability space, so we help physicians navigate the purchase and the implementation of insurance, malpractice insurance. It's a complicated market. It's a very nuanced product, and as healthcare changes, so has the process. Our expertise has evolved, and with consolidation and practices growing, diversifying into different areas geographically or specialty based or structure based, we've kind of been at the forefront of that evolution. About 5 years ago, I left a large firm to start Acadia, in large part because there's a bit of an entrepreneurial spirit, but also I thought I could add a little more value with some customer service and some more personal relationships than maybe some of our competitors out there. And it's been a fun ride. We've done some very interesting, fun things. Been very fortunate, and hopefully this continues for years to come.
Excellent. Talk to me about some of the changes that you've seen in the medical malpractice marketplace.
The buyer, the physician practice, the healthcare system has changed drastically since I got into this industry 10 years ago. Very fortunate to have worked with, over the years, two gentlemen, Brian Kern and Henry Kane. Vast experience, much longer term in the business than I, but we work well together, and to address the question, have been able to help practices in a variety of ways navigate the market. The carrier, the insurance company dynamic has been steady, although it's a very cyclical market, and we've seen some smaller companies come and go, some larger companies grow through acquisition or state diversification. The product has not changed greatly, but they've added to it, and we can go into some of those nuances. But most of the change in the industry has been driven by the provider base and what that looks like in 2019 versus 2015 and 2010 and so forth.
So can you tell me a little bit about why physicians in the age of technology that we're living in, where they can just go online and buy their own insurance, why do they need Acadia? Why do they need sort of that consultative approach that you bring?
There is still room in our industry for technology to positively impact the experience, the process of acquiring malpractice insurance. The education part is a little bit more complicated, and the product nuance or the sensitivity to professional liability insurance is much different than most insurances out there. Mm-hmm. It's not insuring a table. It's not insuring, even a slip and fall incident, which can be quite serious. It's really a reputational. It's a very sensitive area to the provider, and technology has a very difficult time sort of quantifying, if it could at all, the nature of that purchase. In addition, people still enjoy working with people, and that can't be eliminated. There's a multitude of areas of our lives that is the exact same experience. Mm-hmm. Whether it's going to buy a bagel at the bagel shop or it's buying malpractice insurance, people still don't mind speaking with and learning from and developing relationships with other people. And I think we thrive on that. We encourage everyone we work with to pick up the phone and speak to people. Mm-hmm. and hear their concerns or address their concerns. And even via email, it's not quite as effective sometimes as over the phone or in person. So we, as much as technology, and we want to leverage technology, there's still significant impact by having strong relationships and understanding how to listen and assess certain circumstances to help the client. Further to the technology that we can leverage and do leverage in this space. And hopefully it will continue to develop, because I think there's efficiencies and there's some economies of scale to be achieved here. We have a platform via CAQH, which is basically a portal clearinghouse between the payers and the providers. And we are able, through a partner of ours, to, within 24 to 48 hours, access a complete file on a physician with their consent, confidential of course, to underwrite or do due diligence on a specific practice. And we use it in two ways as of right now. One is to underwrite prospective clients or for their renewal process. And it's a deep dive into their background. It alleviates the need for a 10-page application. And it really gives us, as the consultant in many cases, an easy and seamless look into the practice. Separately, there's due diligence that many of our large clients have utilized this platform for, whether they are backed by a private equity firm and they want to do an acquisition that they are not so familiar with, or they just want to know about a physician they're hiring from another practice or another region. They can use our CAQH profile, and that tool, which is right on our website, one click of a mouse, 4 fields on a web page, and in 24 to 40 hours they have something that may have cost tens of thousands of dollars or may be inaccurate and outdated. So we certainly encourage the use and push technology whenever applicable, and that's one area where we've been really outpaced the market as far as utilizing it.
Mm. You spoke a little bit about your relationships earlier. Talk to me about your relationships that you hold with your clients, and then furthermore, the relationships that you have with the carriers in each of the states.
So the clients want to know, if they're an educated buyer, which we try to make them an educated buyer, that they're getting the best customer service, but also the best market coverage. And in many states, as this industry evolves, and the players change and the financial circumstances of the insurance companies change, evaluating those and having relationships and representing them directly is critical. And that position in the market where Acadia is currently at is invaluable to the clients. It helps that relationship, so they always know that their advocate is at the forefront of whatever market changes happen. On the back end, having great relationships with insurance companies is important. They're a partner of ours. We have implicit trust in them and them in us. And we value those as much as anything in our business.
Excellent. What dynamics in the marketplace today are affecting liability?
The liability has evolved slightly over the years. State by state, we can go through many different changes and differences geographically, but industry-wide exposures have evolved a little bit. There's a significant amount of telemedicine risk out there. How is that covered? Who covers it? The licensing implications. Where's the venue of the case? That's one emerging space in healthcare, which again trickles down to the professional liability area. Additionally, and this has been in play for some time, exposure for your professional entity, and that needs to be addressed. And that gets quite complicated as these groups of our clients and others merge, grow, diversify geographically, take on private equity sponsor, and now they have 12 entities, a parent company, a managed service organization. How is that all covered? And probably speaks to again, the changing landscape on the provider side impacting the insurance side, and who do you rely on to address these needs and risks.
Excellent. From your professional perspective, how often should, be it hospital systems, be it smaller practices, be evaluating their medical liability coverage?
In this marketplace, it's very frequently. It's changing rapidly. The underlying financial situation, which for some carriers has never been better, and some carriers, they may not be around next year. That underlying financial condition may dictate how often you're looking at the market and your risk profile, your group situation. We run the gamut from looking at at quotations and shopping the business every year to having several meetings and deciding to stay put. But the eyes and ears on the market is as valuable as that process to go out to the market and get competitive bids. We know, typically we know, because we're so invested in this one niche space, whether there will be competition and how much, or whether there will not be. And knock on wood, we've had a tremendous track record of only working with stable, long-standing companies. Several companies in the industry have gone out of business over the last 5 years, some of them right here in New Jersey, some based in other states. And again, knock on wood, we've never been a partner of theirs because we value long-term relationships, strong financial condition for our clients. And that's proven to be a good formula.
Excellent. Do you want to speak a little bit to the specific geographic locations where you've seen significant changes, be that in New York, in Connecticut, down south in Florida?
Sure. New York has, over the last 10 years, evolved more than any state, maybe in the history of this industry, 40, 50 years of turmoil and change and market cycle. We've sort of been at the forefront of it, in part because of our geographic presence here in the Northeast, also because of our carrier relationships and our dedication to the space. But it went from a very, in some way, uncompetitive, to be generous, market to a very competitive market. And we're still seeing competition come in. In a healthy, economics 101 market, you've got competition, you've got stratification of quality, and the market works itself out. The state governments, Department of Financial Services, or in New Jersey, the Department of Banking and Insurance, they regulate, but they don't onerously govern every move by a specific company. Depending upon the state, there's certain levels of interaction between the regulators and the carriers. In New York, it's very heavily regulated, as are several things. And that has led to an incredibly unique market dynamic where companies that want to do business in the largest premium state in the country have come in as risk retention groups. Risk retention group is a federally chartered platform for an insurance company to come into the state, regulated in a specific state, such as South Carolina, Vermont, Nevada, you name it. You can be a risk retention group in any state just about. But you don't have to file with every insurance department that you want to go into. So if you're domiciled in Washington, D.C., and you want to do business in New York, you don't have to go to Albany to get permission, and you don't have to let Albany set your rates. And how does that play out in the market? Well, it allows them to charge a premium that they think they can continue to do business and make a little bit of a profit, but also win business. And that's sort of how it is in other states. New Jersey, Connecticut, Florida, you mentioned. It's a nice balance between regulation and independent thought by each business, each insurance company. So over the last 10 years, New York has become a place where risk retention groups have thrived, some very strong, and some will be here for another 100 years. Some are already out of business.
Right.
And navigating that is a bit of a challenge, but it's, again, something we do, and then that's all we do. Florida, another unique market. Physicians, especially in a couple counties toward the south of Florida, do not necessarily always carry insurance. Where in New Jersey, it's a condition for having a medical license. In New York, there is no law, but it's given you're going to carry insurance. In Broward and Miami-Dade County, some physicians don't carry insurance.
Wow.
So that's a whole other dynamic that needs to be addressed, and in certain cases they will not buy it. In other cases they will, and I think the trend is, if you look at a chart, if 10% of the physicians are not buying insurance in Florida, that number will decrease over time.
What has your interaction been like with physician groups down in Florida? Would you say that you've had to take a significant amount of time to educate them, or has it been more of a simplistic process?
Yes, the education process is never taken lightly, And sometimes it depends on their economic situation or their risk profile, and does it make sense to buy insurance. There's a
Right.
Homestead Act in Florida which continues to be in play, whereby, summarizing it, you can put all of your assets into a home and they can't be touched.
Mm-hmm.
So there is a thought that that's the best risk transfer process you can engage in. Conventional wisdom nationwide and throughout most of Florida is we will have insurance and we will buy it. And there is a vibrant market. So the marketplace dynamic that I explained in several states, excluding New York, does exist in Florida, and there's no reason not to buy insurance if you're a physician in Florida.
Of course. Going back to the New York market, is there anything specifically that you would say as a piece of advice to a doc that's reevaluating their insurance?
There are a number of very, very strong companies in New York now. 3 admitted companies come to mind, 4 or 5 risk retention groups come to mind. Again, different level of financial stability and position. But it's mainly about, as much as it's about picking your insurance carrier, it's also about picking your broker, because one broker can open your eyes to 10 companies,
Right.
and some other brokers can open your eyes to 2. And if you're not shopping in the broader market, you're selling yourself short. In addition to that, risk management continues to be underutilized, and it shouldn't be. It's a free service. It is something that the internal staff of a medical practice, which is sometimes the most important part, they can always use assistance in navigating very complicated things. And this free service we encourage to all of our clients, whether it be on site or on the phone. Speaking with an insurance company's risk management department is something that we highly encourage.
Excellent. All right, Scott, the show is called Spot On, so I need to put you on the spot here, and I'm going to ask you another question. You spoke a little bit about the marketplace being cyclical. Talk to me about how you see that cycle changing over the next couple of years.
So it's a good question. There's been an incredible swing in the market. 2 swings, one in the early part of the 2000s, and then very soft, inexpensive pricing nationally. And now we're coming back to this swing of more maybe responsible pricing, higher pricing. There's certainly been a flattening and no more real significant rate decreases in the market. Underlying all of that is why, right? And I think the why is because companies who have done exceedingly well over the last decade were able to hold rates down for physicians. And companies who have not done well have continued to chase the premiums down a rabbit hole. And those companies, some of which are out of business already, others are, time will tell, are going to have a tough time competing on a national level with some very strong, well-financed companies. So I think in the next 2 to 5 years, we will see again a bifurcation. Some companies will continue to deteriorate, and how do those physicians navigate that? Who do they rely on to be their eyes and ears in the market? While others, A-rated, nationally recognized companies, grow and grow and grow in a more responsible way. I think if you're a physician, you should not expect your premium to continue to decrease unless you're part of a very large group which has significant buying power in the market. And keep your eyes and ears open, because there is a move toward higher pricing, and stronger, larger carriers are going to make that more of a reality than the smaller ones.
All right. Well, thank you, Scott. Thank you for joining me.
Thank you.
Everyone, Scott Parker of Acadia Professional. Thank you for joining us, and we will see you next time.